And in our top business story, the UAE's energy minister has rejected a call for an emergency OPEC meeting over the latest slump in oil prices, saying that the strategy of letting market forces deal with the world oil glut was working. His Excellency Suhail al-Mazrou'i reportedly made the comments during the 7th Gulf Intelligence UAE Energy Forum meeting in Abu Dhabi. Earlier, Nigeria's oil minister, who is the current president of OPEC, had said that a couple of countries in the group had requested an emergency meeting for February or March ahead of the regularly scheduled ministers' meeting in June to deal with the oil price crisis. Asked about those comments, His Excellency al-Mazrou'i said that he didn't see any point to such a meeting, adding that he was not convinced OPEC alone can solely or unilaterally change this strategy. Mr. al-Mazrou'i echoed statements from Saudi Arabia's oil minister, Ali al-Naimi, who has consistently said that the only effective policy to deal with the glut that arose when production from shale doubled U.S. output from 2010 to 2015 is to let prices force cuts from the highest cost producers. The UAE minister said he couldn't tell how long it would take to bring the market back into balance, but he said that he expects that in the first half of this year there will be continued pressure on the market. And as low oil prices take their toll, the UAE's bank deposit market will continue to weaken in 2016, according to Standard & Poor's, leading to further tightening of liquidity accompanied by higher interest rates and a further slowdown in credit growth. The ratings agency, however, stated that banks are prepared for deteriorating conditions into next year as oil prices remain lower for longer, leading to a decline in government spending, slower economic growth, and falling asset quality. The report added that it also expects asset quality to erode, which could translate into higher credit losses, with earnings growth for UAE banks posting negative growth in 2016. The 5 UAE banks rated by S&P, according to credit analysts, are ready to face the tough period ahead, thanks to high loan loss reserves, capital ratios, and strong funding profiles. S&P has a stable outlook on the National Bank of Abu Dhabi, Abu Dhabi Commercial Bank, Sharjah Islamic Bank, the National Bank of Fujairah, and Mashreq Bank. S&P said that the slump in crude will also cause a drop in investments by private companies and bank lending. It also added that stronger lending practices and balance sheets at the UAE banks compared to 7 years ago also means that banks can cope with a deterioration in asset quality better than during the financial crisis in 2009. Just 8,000 residential units were completed in Dubai and Abu Dhabi in 2015, less than half the number in the previous year, as developers responded to more subdued market conditions. JLL's annual review of the UAE real estate market for 2015 said developers in the UAE have also been hit by tightened liquidity, adding that the trend is likely to continue well into 2016. A slowdown in the pace of economic growth has also affected the rental market. Although with supply also generally subdued, there has been a lesser impact on residential rents compared to sales prices, with residential rentals in Dubai falling by around 3% and rents in Abu Dhabi increasing marginally over the year. Craig Plum, the head of research at JLL MENA, stated that following a rapid increase of residential rents and prices between 2012 and 2014, the market has now clearly stabilized, with sales prices falling in Dubai and remaining stable in Abu Dhabi during 2015. But with the significant decline in transaction volumes in both markets. JLL added that rents have performed better than sale prices in all sectors of the residential market in 2015, increasing rental yields and the future attractiveness of the sector. As trade volumes between the GCC and Australia reaching nearly 10 billion Australian dollars, the Australian Trade Commission, Austrade, is all set to host a series of events in the UAE, Kuwait, Saudi Arabia, and Egypt from the 24th of January to the 1st of February this year to promote bilateral trade, investment, and cultural ties. In its fourth year, the theme of this year's Australia Unlimited MENA campaign is how economies in the region can utilize the expertise of Australian firms to develop their healthcare and medical sectors. During a launch ceremony of its annual flagship event, the Senior Trade Commissioner and Consul General of Australia in Dubai, Gerard Sieber, stated that as access to quality health services is a top priority across the MENA region, their aim is to make Australian firms the first choice when it comes to choosing a partner in healthcare and medical services. Consul General added that Australia's relationship with GCC economies, and particularly with the UAE, is growing, with year-on-year increase of Australian exports to the region increasing 15.8% from 2014 to 2015. During his remarks, the newly appointed Australian ambassador to the UAE, His Excellency Arthur Spiro, highlighted that the UAE and Australia are natural partners with strong ties in various fields, including trade, with latest figures nearly 6 billion Australian dollars, and this is only going to strengthen further in the future. This year, as part of its annual Australian Unlimited MENA campaign, Australia will target the Middle East developing health and medical sector, bringing over more than 60 companies to the UAE, Qatar, and Saudi Arabia.
Australia in health and medical has a strong reputation. We're innovative, we have good education facilities, good technologies, good companies. And the UAE in particular has very strong plans about being a health hub, not just for GCC but broader region. Looking at growth at 7% per annum, which is a great statistic, and the whole region across Middle East and North Africa could be valued at 144 billion by 2020. So obviously globally it stands out, and our health and medical sector, once we started promoting this opportunity, has really become very excited about it. So we have 60 firms coming across. 34 to 35 of those will be equipment, technology, training, service providers. We have 19 tertiary institutions. Obviously there's a lot of education and training in there, but it's also the research connections between institutions and firms. And we have 7 new early stage firms with IP they want to develop and look for partnerships for investment from the investor community.
What we do here in promoting Australian industry, in promoting Australian exports and trade, we also do on the other side in promoting Australian businesses to come to the UAE, because, again, as I said, the key focus for us is to make sure that we both benefit from this, that there is a mutual, reciprocal benefit from these campaigns. So we have, as you said, health is a key one. Our services sector is a big one that I want to focus on, including education. Agribusiness is something that is of a particular interest for me personally, and in my time here in the next 3 or 4 years I want to focus on that particularly because it's another one of those areas where we can build long-standing relationships, where we can develop national security here, and we can make sure that the prosperity isn't just a flash in the pan but something that goes forward for a long time.